Hello, everyone, and welcome to another interview here on Coin Bureau Clips. Today, I would like to welcome Tanawat. He is the CEO and co-founder of Token Unlocks, one of the most preeminent token vesting platforms out there. So, hi, Tanawat. Welcome to the channel.
Hi, Nick. It's great to be here.
Great, man. So we've got a lot of really interesting stuff to cover today about vesting, unlocks, and tokenomics. But first, I will recommend if you guys don't have a subscription already to Token Unlocks, it's well worth considering. I know this is not a paid shill or promotion in any way. It's just that we've been using it for over a year now, and it's a super helpful tool. And if for those guys who are CBC members, you'll know you'll get a 50% discount if you're a CBC member. So the link to the Coin Bureau Club and Token Unlocks will be down in the description for you guys to take advantage of. And I'll also say, of course, that nothing in this video is financial or investment advice. So please consult your financial advisor before making investing decisions. Okay, so Tanawat, I want to jump straight in. And especially for these viewers who potentially are new Coin Bureau Club viewers and Coin Bureau viewers in general who are new to the concept of token vesting contracts. Can you explain it in simple terms? Why are they needed, and why is it important that crypto investors pay attention to them?
Good question, Nick. I think general investor already know about token market cap. Token market cap is the one you rank between tokens. It uses circulating supply and the price of token to calculate it, right? When we dig deeper, you can see that sometimes token market cap can increase, even though the price stay the same. Actually, those come from token unlocks and vesting schedules, which normally we can see it in the white paper. Why it happened? Because the project raising funds, and then they negotiate a contract with investor. Let's say I want to build some projects with blockchain technology, and I want some money like $1 million of investment. I can negotiate. Hey, I'll build this in 6 months. I will give token back to you. Please give me $1 million to build this. And when times goes by after investors say yes to projects, the project need to send the tokens to investor. So that's become when the token is unlocked for investor. This is example of what happened to vesting contract. And apart from that, there's other way to release tokens. And if investors know this, they can kind of like be aware of what's going to happen to these projects before it happens. You can, the market cap going to increase in 2 months, in 3 months. And knowing this information, you can plan your portfolio better. And even though understand the project's dynamic better, rather than using only market cap. Yeah.
Okay, got it. So obviously, yeah, it's the emission of tokens that comes from. It's not just. Is it just because vesting will obviously be to investors, to team, and there's also general emissions that come from token protocols, right?
Right.
So you guys track all of this, right?
You're right.
Including the normal emissions.
Yes, not normal that rather than vesting schedules, there is emissions from a smart contract for like the DeFi yield protocols. There is mining emission, for example, like Ethereum validators that reward out those POS stakers. There's different kind of vesting and unlocks going out there with different kind of projects, and knowing who gonna receive that tokens critical for investor to like, hey, is this an airdrop? It is a mining reward, or is the investor unlocks? And those critical informations can also guide you what to do next in the market.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am GigaDick, the dude with the biggest PNL in all of crypto.
Bro, say what? My PNL is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you're still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm gonna be rocking a super yacht while you're still stuck in traffic, bro. The Bro Crypto podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro.
Bro.
Bruh.
Bro.
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 Okay, let's talk now but more about the different types of vesting schedules, right? Because there's obviously numerous different types. There's cliffs, there's regular monthlies, there's investing going to particular investors versus team members versus foundations or community. So can you talk about the different types of vesting schedules out there and maybe potentially the red flags versus those that are well developed from your experience?
Right. Generally, there are two main category: cliff and linear. On the deeper side, there are four. Apart from cliff and linear, I'll explain the difference between them. Is the dynamic release and unallocated vesting as well. The cliff is the big chunk of unlocks happening at single time. Normally, it's investment unlocks. The second is linear, is daily release as constant rate, normally in a DeFi and U farming protocol. The dynamic one is mostly in mining, like Bitcoin hash rate. And the fourth one is unallocated. Normally we see in ecosystem grants and also like optimism, retro fundings and airdrops that haven't decided timing yet. So there are generally four technical terms for vesting. The red flag, I would say that there's not generally a red flag for type of unlocks, but what you need to look up to is the reason behind the unlocks. For example, if the big cliff unlocks happening right now, the demand can handle it or not. The project already execute by their roadmap or not. If not, have they communicate clearly to defer it? For example, if the big tokens announcing a big unlock soon, but the airdrop is not clear, people can be doubt about this cliff. They be doubt about demand of the tokens. That side of the demand side is important for why the cliff is happening too. So those are the major red flag I would look up to if there are enough demand or not. On other sides like unallocated as well, if the governance already talk about where the fund is going or not, it can be red flag as well, even though that it's not a big cliff. If a linear vesting but the receiver of token is not really spending the money wisely, that's also the red flag. So generally, I would look for good communication for team or not, demand from the team, demand for the projects is great or not, and finally compare with the amount of release that they decided to announce.
Okay, so and in these cliff releases that usually come, what increase? So obviously, any sort of dilution is but if it's a massive amount of dilution because it's a big unlock, what sort of circulating supply, benchmark would you say is a bit too much coming out that investors should worry about, right? Because it's all in relation to the circulating supply. How much is being unlocked? Is there a particular amount that you think should be worrisome and people should pay more attention to?
That's a good question. Can I share screen real quick? This is
Sure.
some ways of a great way to analyze. So my answer to this is we tend to look at what already happening in the projects or not. For example, if we go to our supply analysis charts, right, and we see that
Yeah.
hey, let's say Solana gonna have like $68 million unlock this week. The amount is quite big, but when we dig deeper, we can say that. Let me get. We can see that it's happening for quite some time already. It's not that new. That's meaning even though the percentage or amount of token is quite high, it might not change the ecosystem landscape much for this token. I would look into if that amount is changed the dynamic or not. On the contrary, if you look into like cliff unlock for this chart, we can see that there will be says tier in the future here. So we can see that this is the first time for a big cliff. So that's the thing that I wanna look to, if it's the first time or not for this. So we can take a look at probably there was something changed about the dynamic of supply. There's no
The
criteria on
reason you choose to list, yeah.
it.
Yeah, that's gonna be a tricky one that they're gonna have to handle. Yeah, everyone's been talking about that. So it's basically okay. So the point of the matter is, it's not just about the amount; it's also how regularly it happens.
Yes.
Because if it's coming at a situation where there's a massive amount that's coming at that particular point, there are investors who may have been locked up, or team members or whoever may have been locked up for a long period of time, and then when we come to this particular cliff, they've now got this opportunity to sell. Whereas previously, if they hadn't had the opportunity, or it was a long time ago, previous quarters, previous years, it's more likely to be. So it's important to the size of the cliff. Okay, that's interesting. And then following on from that, if you were to think about, obviously you mentioned, of course, it's not just about the vesting, it's also about disclosure in terms of where funding is going, especially from the project side. But obviously it's not always the project, because sometimes there's investors and they get in their tokens sent to them, and some may sell, some may hold, But if you were to advise a project, I'm obviously NFA and all this kind of stuff, but if you were to advise a project about deciding a vesting schedule, what would you suggest is the most optimal way to release these tokens?
That's a good questions. And actually, we do work with some projects for consulting on this as
Okay.
well. Generally, there's a three core consideration to this. First is the why you need a token, and each project is different. I mean, for example, DeFi protocol, you might want to incentivize liquidity providers or traders. For GameFi, you want to incentivize NFT asset traders or game activity. For blockchain, you want to incentivize node runners, validators, or builders to build on your chain. So first principle is to design a long-term incentive. And if it's a DeFi, I would recommend like a linear release or dynamic based on liquidity parameters, right? For a chain, we might want to have a single cliff one time of the vesting schedule to induce activity at a single time. So first principle is long-term alignment. Is critical to decide whole vesting schedules. The second thing is communications. We see that similar vesting schedules but communicate differently in the vagueness can create FUD for the project as well. So one, we decide to this is the allocation they want to give out for different stakeholder of the projects. Communicate clearly often result in better long-term alignment. And the third is execution and timing. We often see that when once project decide vesting schedule first day, and they build project for let's say 6 months, the roadmap is not ready. Do they decide it at the right time to change the schedules, to defer it? For example, if airdrop campaign is not ready, you communicate early, it's better for the projects. Or the timing of roadmap building that they promise is not ready, aligned with the supply. Do they communicate clearly and change parameter at the right time? So I think there's a three element to this: long-term alignment, communications, and timing of executions.
Yeah, that's key, especially when it comes around to airdrops, right? I think that a lot of the most recent airdrops, the mismatch between expectations and what's been delivered in terms of like between the community and the project is what's caused a lot of the grief, and then that just leads to the airdrop farmers dumping their tokens the moment they get it released to them, because they don't really have this alignment. How do you in this environment create that alignment? because obviously you're trying to incentivize, especially when it comes to relation to farming points, all that kind of stuff. Because I think projects, the goal they're trying to achieve is this alignment. They're trying to find the kinds of community members and users who are going to want to use the protocol post drop. It's just like, how would you think about structuring that alignment? Like it's almost decisions like, how would you think about an airdrop campaign? Because there's so many variables to that itself.
Right.
But like, if you were to think about it, like, how would you simplistically think about aligning your incentives with that of the community, or that of the community centers with that of the project, without mercenary airdrop farmers just jumping in?
Right. I think become the first principle of thinking long term about projects. For example, designing in years, not in like months time frame. I was rather like the new projects coming up recently is more of like marginal change, but not whole narrative change. Like they try to do a little bit better than other projects at different chain, or try to like doing different marketing sides of the projects. But I do see some projects that really think about years expansions of incentive alignment. Even though the project fully unlocks, they can still incentivize people to use the protocol, and that's quite unique. For example, Aave Pendles have been like living long enough, right? And they kind of tune those token reward incentive and governance to adapt with the market, change by time, and also make sure that the receiver of token actually align with their long-term incentive. But I think lately it's been challenging for sure. Giving airdrops is a lot of thing is mercenary, right? Getting tokens and then get out. But I think it comes to the principle of why the team building that in the first place. You want a better chain, a better DeFi, a better GameFi or not. And then when you lay it out longer term, it become more effective for the projects that's been lived long enough. And we can see some good example on that too.
And just slightly going on with this airdrop point, because I've seen it's obviously being talked about a lot now. Do you think that, especially with some of the biggest airdrops we've had in the past formats, and some which have been disappointments for the community and created a lot of acrimony between the community and the projects, and do you think that airdrops as a reward mechanism have, are no longer in their vogue and people want to move on? And do you think that projects should consider other forms of incentive mechanism apart from points? Is there what other solutions could there be instead of like working on a points program where they get rewarded for just doing stuff in an airdrop campaign?
Good questions. Apart from the airdrops, I think airdrops can be fine. Just that the valuations of it sometimes is not fine. Recent low float high FTV. For those who don't know, low float high FTV meaning that you launch token at low circulating supply, and you're gonna release huge amount of unlock at small time. I think that's also affect the airdrop and point design, because eventually at the end of the day, token holder look into market cap rank, and your projects make sense or not for them to hold. So if the valuations make sense, I think airdrop and point for the farmer is make sense for them to hold.
Okay.
And that's
Valuation.
is come from principle of valuations and compare among the projects. I would say that the airdrop and points are need to be carefully think about more long term. It's become more challenging for sure, because the market do get mature, and recently we see low float high FDB that actually scare off the airdrop farmer to sell that eventually. So I think FDB also play an important role in this. Yeah.
Okay, so just moving back from moving away from airdrops again, and just back to vesting schedules in general. Now, obviously, I know you said you don't want to comment on specific projects, but at least on the positive side, in the sense
Mm.
that projects that have done it well and correctly, and can you at least let us know which of the recent larger projects have got it right in terms of they got that sweet spot with the right amounts of being unlocked at reasonable period of time, so it's not too much circulating supply, it's going to the right groups, and they're trying to incentivize holding. Like, which
Yeah.
projects do you think have got a very good vesting schedule?
That's a good question, Nick. At least this can illustrate some unique design. One of the projects I want to point out is Optimism.
Mm,
The thing that we want to point out here. So this is a token unlock dashboard, though. We
yeah.
structure vesting and tokenomic data. So you can see that there are price chart overlay with vesting schedule here. And what unique about OP is that they allocate uh, tokens that for retrospective and grants. This is the portion, the pink here, and also the orange one here. What I want to point out is that they really think about uh, who to allocate to, and also they kind of like set aside for flexibility, meaning that they admit that they might not know fully when they build projects what they might need in the futures, so they set aside some allocation for ecosystem funds, and that I think is a unique play to this. You don't need to allocate everything since day one, but as times go by, hey, Optimism need some kind of governance improvement, some kind of better dashboard, better sequencers for the L2. They can allocate it that, and you can see that after investor unlocks, there's the wave of price stability, so they incentivize more projects to build on top of them. And this is kind of like a good example that I like. The projects decide tokenomic with flexibility in the futures in mind. So
Mm.
this is one of a good example. Um, and you can use like the tools to compare as well, like who allocate the tokens to which stakeholder. Apart from vesting schedule, we do have compare um, features that let me show you real quick here. And direct competitor of OP would be Arbitrum, and you can see like, okay, hey, you can see how many percent they decide for the founders, they decide for the ecosystem, and that might give you a clear overview how many funds they allocate to which activity for the projects.
Okay. Okay. So yeah, obviously, so the where it's going to is important. Obviously, it's going to community building, and it's going to an ecosystem that's going to help develop it. In the case of Optimism and Arbitrum, I guess that when most people think about unlocks and they get worried about unlocks, is the relation to, okay, are there large investors in the project, right? A VC backed project, who are going to potentially dump when the tokens come out. Now, obviously, there's always that risk when you have early stage investors. They may want to liquidate, they may not want to. But if a project has to think about, okay, how am I going to structure a vesting schedule, at least for early stage investors, right? It's not related to ecosystem development. They paid for those tokens in a SAF. They'll get it when it comes out. What investing schedules, at least for these types of investors, would you say is optimal, balances their demand for not impacting too much on circulating supply, but also incentivizes investors to want to invest in a project because they think, hey, okay, the vesting schedule isn't too long. So I mean, it's like, how do they square that circle? How do projects think about it? And also, like, how would investors because there's lots of big L1s now, lots of big cryptocurrencies that have got to be backed by large investors early stage and now coming to market, going through vesting schedules. And people are trying to filter through and say, okay, which ones should I worry about from a vesting perspective, from a emissions perspective, which ones not? So yeah, just more specifically as it relates to investor vesting schedules, which ones do you think have done it well? And if not, which structure do you think works best?
Yeah. If that, I think there's a classic example is Solana. Actually, if you can remember, I'll show you quickly.
They have that massive cliff in 21.
Right. It's like 90% circulating supply, right? If you zoom it out, I mean, like, it's interesting case for sure. I didn't say that there. It's not about only vesting schedule, but the demand side and other side of story is quite interesting to study as well. Like
Mm.
they're doing like 90. Let you think about this. Like they launched the tokens for like almost less than a year, and then
Yeah.
suddenly supply jumps like 9 times, 8 to 9 times what they had. And back then was
Wow.
like $3, right? And then
Yeah.
and you
Oh, it's
kind of
like
all
I
right.
remember this because I've used this example before because I remember when we were doing back in 21 we were doing reviews in Salon and we like watch out for that cliff.
Mm,
And okay, yeah, it's true. It was a massive increase in circulating supply, but in the longer term, when in doubt, zoom out and you look at what's when you zoom out at Solana's price
right.
chart, was it like 70 up from the price point into early 21 to 70 times, and then 120 or so at the previous high. So it's interesting. Okay,
Right.
yeah. So I guess it's like which is it's just a matter of demand. So it's like so you say it's like obviously they need to balance demand and supply, right?
Yes.
Because that's what impacts on price. It's demand and supply. So if it's coming into a low liquidity, there's no buyers, there's no interest, the chain is a ghost town, no one is going to dump. But if there's a lot of activity, people are interested in it. So it's trying to square that circle, you say.
Yes, exactly. That's the more of the nuance on design the supply. So I would rather focus on design the demand align with supply is more critical. Like if the team confidence to execute this within month or two, within like years or so, investor gonna be confident on that plan. And that if the roadmap is right, they don't need to worry about supply design. I think the projects that quite concerned on supply design because they can't figure it out on demand yet, and that
Mm.
would be a more topic that we should talk about more as well. Yeah.
Yeah, I get it. So it's demand. It's like it's on the community side as well, right? That's community. So you got your investors, they're the supply side, they've given you the money, but now it's like you need to incentivize demand. You need to
Yes.
incentivize network demand. And that's why they all try the airdrops usually. But now that also has its own questions, which we just covered. Okay, so coming back to this point around the fight of unlocks, and this is interesting because you guys actually did a report last year, which we've quoted and actually did a video on in terms of breaking it down earlier this year or sometime last year. And basically, one of the conclusions it came to, or at least, is that a lot of the FUD around the unlocks is created before the unlock itself by people within the spot market, rather than the actual supply cliff or supply launch leaving and coming onto the open market itself. Can you explain that a bit more?
I think it depends on each project, and what do I see is that even though the token release is not giving out to the receiver, sometimes those investor already hedge their position on like a perf, like shorting ahead of time. And I would say that it generally people shouldn't use unlocks to like short only directions. Generally, investors should look up to the demand because on the project side, most of them try to execute a good news along with the demand already. Along with the supply already. So it
Yeah.
become like a target for short squeeze as well. If the project's
Mm.
already, if the team already, if the investor already sold pre of the unlocks, hoping to get cheaper price, right? It's kind
Mm.
of like a game theory, and we do see this case as well, but it's 50-50. Some projects still hold, if not it's supply released to the market, then the price effect. So I would say it's unique per projects, how much they do. But I see like some projects that a lot of community want to hold regardless of supply too,
Yeah.
and those are more critical. Yeah.
Okay, so let's take a bit back now and look more macro across the whole altcoin space. And this is more also subjective in sense, views on altcoin season and all this kind of stuff. But obviously, one thing that is happening later this year is obviously there's a lot of supply coming unlocked. in general. Like an ocean of tokens being unlocked in terms of a lot of the big, highly funded VC, high FDV, low circulating supply tokens. A lot of projects that have gone through Series A and B funding rounds at $1 billion valuations or so, and they come into market. Does this oversupply worry you about the prospect of a potential altcoin season?
I think it's a cycle that we will always see new projects raising funds, and we will have a cycle of it. What I would love to forecasting is the total unlocks on future basis in monthly. The answer to that is yes. We do see months that potentially scarier than other months. For example, we use this supply screener. You can see that this month alone, like 1.5 billion in unlocks. Sounds big, right? But actually, it potentially better than other months. So I would say, okay, this month the alt might be a little bit better than the futures, or since July, like a lot of crazy unlocks back then. On macro side, I would say if the trading in months time frame, you can still use this information to like time your strategies. And when you dig down, you can also look into breakdown to, okay, it's affect only DeFi sector or not. For example, like this, I will be more bullish for DeFi sector because they are less unlocked in that
Yeah,
particular.
okay, I got it. Yeah, that's cool. You can screen by. It's really cool. You can screen by sector. That's cool.
Yeah.
Yeah, I mean, it's also. I mean, yeah. My question also more broadly meant. Obviously, there's the unlocks that are for current projects, but there's also obviously a lot of projects that are yet to hit TGE, right? With really big valuations. Which, okay, obviously, then the unlocks probably only happen later on. But I suppose there will be some that's unlocked on TGE as well. So I guess it's just a question of like, there's just, and this comes back to a macro question more broadly about altcoin seasons in general, and it's, but I guess it's around previous altcoin season, right? 2021, you had a lot less tokens, right? A
Right.
lot less projects, a lot less that people could focus on, right? Potentially, whereas this time there's just obviously the space has grown. There's a lot more projects, but we're going to need much more capital on the demand side
That's
in
right.
the next altcoin season to pull everything up. So yeah, it's just a question of whether there's a potential oversaturation, or
Yes. I
but
quite agree with that. I mean, like, and I think market gonna learn from it. I mean, like, I heard like some VC already under the water for a big valuation project as well. So I think it will be a loop where VC will be cautious investing for the next following funding round, and we're gonna correct it more in the cycles. Let's say that this year high FDV private investor already down from the investment and buying from the market actually cheaper. When there's new project raising fund, I think the recycle way, okay, this valuation doesn't make sense anymore, and I think it takes time for the whole market to react to that. And I can see more centralized exchange reducing their listing FTV more to make sure that it's not overflowed and retail and doesn't get wrecked when trading on that centralized exchange. Yeah.
So just another quick question. So basically, we obviously, prior to this, I asked a few of our members in our Coin Bureau Club, which is our subscription model, our subscription service. Asked them if they had any specific questions for you around token unlocks and just generally vesting. And one of them asked more specifically around node sale distribution, which is a different kind of funding model that tries to make a more equitable distribution of tokens through different tiers, and that allows retail to get involved as well. What do you think about node sales? Do you have an opinion on it as compared to normal token sales through VC model around, Series A, Series B, seed, and compared to this more equitable potentially solution of node sales?
I think that's a great questions. Node sale is I quite like the node sale structure. It kind of like force the investor to participate in the network at day one. It's like if you don't run a node, you won't get your tokens. It's tie
Yeah.
your activity of like maintaining a node with that vesting together. So that's a very interesting use case of rather like just throwing money to the projects, but actually
Yeah.
be part of like decentralizations running node. I totally agree with this approach. What I would look further is that what the projects try to achieve. Would they need a node or not? Would projects make sense to have a lot of nodes or not? And then what after they release after the node sale is a follow-up question. If it makes sense to secure the network, then yeah, that's a very green flag as well. If after releasing there's a way to utilize the tokens rather than sell, that's a good way to analyze them. So I quite like the node sale in this area, and we will try to structure more of the data in token unlock as well.
Include node sale data. Okay,
Mm.
that's cool. Speaking of token unlocks, then obviously now it's a really useful app. Obviously, as I mentioned in the beginning, it's probably quoted the most in media in terms of like platforms to get token unlock information. Now, when did you start it, and how do you get the data? And how do you make sure that it stays updated regularly? Because obviously, this
Mm.
kind of investing information is very manual, I would assume. It's like, projects disclose this in their white papers and their docs and all that kind of stuff. So, yeah, I'm just curious to get your take on these things.
So we started since 2022.
Okay.
It's right around like just before FTX crash. Um, but after
That's right.
Terra crash, so we built in bears. uh,
Mm,
Back then, it's kind of needed in the market. Like there's a very bearish market sentiment, and people need to know uh, what the alpha, where to find the informations, and so we
yeah.
built the unlocks data from there. Um, the hard part is yes, gather and update it. You may already know that each projects have different technology. They don't have like regulators to regulate how they can issue tokens, how they can communicate it. Kind of like when in the normal world in SEC, when you issue stock, you need to report everything, right?
Yeah.
But with crypto space, you already busy building projects, doesn't have time to communicate, so it become like okay, the team think this is the right amount of information. The community are going to be okay, but that's not actually true. So it's become our hard work to like standardize our everything, gather both on and off chain. So I would say that we do it manually first, and then try to build some data pipeline to track all of it gradually and systematically through time. That's why you can see that there are currently only like 150 tokens on our platform, not like CoinGecko or CoinMarketCap, where a lot of information from a lot of tokens, right? This type of data need more um, time to build and time to track. So we need like a more updated data toolings for technologies, reading smart contracts, reviewing the white paper. So this is kind of like semi-manual work we're doing internally. Yeah.
Yeah, I can imagine, especially when it relates to the reading of the white papers part, because that needs to be done for some of these, because the vesting schedules are not, prior to it, they're not programmatically coded into the smart contracts. It's like, and you need to find this stuff and gather it. So how many? Do you have a team of like? How big is your team? Do you have a team of researchers reading through the? How many white paper researchers do you have there that just go in
um,
there?
we have dedicated we call ourselves tokenomists, like the
Token what?
tokenomic
Oh,
expert.
tokenomists.
Yeah.
Tokenomists. Yeah,
So we have six of tokenomists
yeah.
doing white paper researcher, and we also build like a tool to help speeding up all the research process as well.
Yeah. You see, guys, that's why you need to read the white paper. You need to read the white paper. That's where you get all the good information. So you obviously also, how do users get the most out of using the app? Obviously, you've gone through some of the tools, the screening, and obviously it's very helpful. But like currently, and then also you mentioned that there are new features that could be rolled out. I mean, don't have to disclose exactly, but could you allude to what these potentially could be?
Oh, thanks for the questions. So we start with token unlocks as the first problem we tackle, but generally, I think we are good at overall supply analysis, and broadly tokenomic analysis. So we built tool that back then you need to read white paper on your own and try to like compare like qualitatively. But our aim is to make sure that those data can be compared quantitatively. So we build like allocation screener, so you can compare different allocations by standardize what the project is saying. Back then, they use different kind of words to describe the allocation, but we standardize all the tokens here. So it's become faster to like, oh, how many percentage comparing between each projects. We're also doing supply analysis for like comparing emissions. For example, like what would be 1 year emissions comparing between each projects? I think back then it's hard to access. You can't read like 100 white paper and then update it every day, right? We kind of toward every tokenomic aspect of how you can find the data and answer faster. So think of us as one stop for tokenomic analytic would be a great summary to it. And we'll still like shipping more things that save a lot of researching time for everyone in space.
Sorry, just circling back there to to obviously getting the information prior to an unlock is important, but how do you keep on top of when projects go about changing, obviously there's sometimes projects go and reach out to investors, they want to change the vesting schedules, they may go through governance votes that change the emissions protocols. So how do you manage this? The one thing, obviously, getting the data initially, but how do you constantly keep updated with it? Like, what's your process, your research team's process for keeping updated with changes like this that impact on the vesting?
Right. We built to track kind of like official locations of announcement, and then we include some AI element to it to like speeding up the notifications, and then we kind of like um, verify it manually as well. We have some process. Okay, let's say yesterday the projects update the vesting schedule, but if it's not publicly announced on some certain space, it might be reviewed uh, slower than other channels. So with that AI tool and data pipeline, we able to like update it faster than anyone in the space right now. Yeah.
Cool, man. And yeah, I just want to finish off. Is there anything else you wanted to let us know about token unlocks, the app, vesting schedules, the crypto markets, or in general, just before we round this interview off?
I think the market is getting mature, and like a lot of people need more tools and more media, more educational content, and then we can be safer navigating this space. I think it's quite exciting that the blockchain and crypto space is still new comparatively to other market. But yeah, it's tough to analyze everything, educate everything, keep up with all the informations, and I think we need to like keep learning and then be safer for the space and help each other navigating through space. Even though in the bear, there might be some corner in the space that people can leverage it. Yeah, and
No,
yeah.
I totally agree. Yeah, I mean, that's something we've obviously, back in the day when we were trying to go and talking about reading white papers, we're out there reading white papers, trying to figure out these vesting schedules. And when we do our research, we realize how difficult it is. And there's sometimes, even now, there's just, there's the lack of tools in terms of it being able to filter and compare without just reading that straight into a white paper. And we know that retail these days, like most people, like reading a white paper, we know everyone says you should, but it doesn't have to be the case if people can get reliable tools, reliable services that can help and filter and conglomerate all this stuff in one place. And that's exactly why we use Token Unlock. So thanks again very much for this interview. I look forward to meeting Sunny in Singapore, and hopefully we can potentially collaborate in the future and maybe get you back on once you release these new features and we can talk more about them.
Yeah. Thanks so much, Nick. Appreciate
Great.
it.
Appreciate
Time.
it. No worries. Have a great day, man.